Let's do a quick update on Apple. We've been bullish on this thing since it pulled back into our smart money zone at the end of April into May. The smart money zone is this purple level that we have seated right here between $180 to $183. And this is basically normally where institutions will allow a stock to pull back to before they end up entering and letting the stock bounce. This is normally going to be because there's a massive discount within a bullish market, and they are going to be getting a very, very good price. A great example of this was Nvidia. Take a Fibonacci from swing low to swing high, you will notice that the 0.786 to the 0.618 Fibonacci zone, which is going to be our smart money level, was seated right there, and we bounced to absolute perfection. You'll also notice at the same exact time that this setup was there for the S&P 500. Fibonacci from swing low to swing high. Smart money zone broke momentarily, but ended up bouncing and holding. Once again, this does not always have to happen. It's only got about 55 to 60% win rate, but because the upside, the risk versus reward is so high, this is normally a great time to be a buyer. And we've seen a lot of the other stocks within the Mag 7 bounce off of these smart money zones and break out to all-time high, but Apple has definitely been the lagger. Now, in this case, I think that Apple still has a very good chance to move to the upside, but we've been stuck and squeezing within this level for the past couple of weeks. You're going to see that if we move into a daily chart, price action has been bouncing every time we pull back and making higher lows. This is a good sign. If we broke any of these lows, that would be a signal that price is probably going to sell off. But the fact that we've been holding is a good sign. The other thing that's important here is that price has been making equal highs. When we have equal highs like this is called a liquidity zone. Now, a lot of people think that the more times that we hit a resistance level, the higher of a chance we have for rejection, which is actually the opposite. Normally, the more times we hit a resistance, the higher of a chance we have to break through that liquidity level. So looking at this chart, I think there's a very good chance that price action could continue to squeeze maybe until the middle or end of August, but I do ultimately think that going into the rest of this year that Apple is going to move maybe 20 to 30% to the upside and be trading around all-time highs. What would invalidate this is if price action broke this $200 level. That would give us a very good sign that price is probably going to sell off, but I don't think that's going to happen.